Hi, today we're going to have a look at the 2009 Incomplete Records question 7. This is a type B or a type 2 question where you have to do the balance sheet first and then the P&L. The reason we do the balance sheet first is because we don't have enough information to do the P&L, so from the balance sheet we can work out the net profit and then start at the bottom of the P&L and work our way up. So to start off, we're going to have a look at the balance sheet. The first thing in the balance sheet is going to be intangible fixed assets, goodwill. We're going to do a note for goodwill. So to get the goodwill, the assets minus the liabilities should be what the company is worth. If they pay extra, the purchase price that they pay is extra, so the difference between that and the assets minus the liabilities will give us the goodwill. So the purchase price, we can see from the very top of the question, the purchase price is 400,000. And again, I'm just getting these from the top of the question here. So the purchase price is 400,000. Then the assets, the premises are 292,000. Stock is 36,000. Debtors are 32,200. Rates prepaid 450. Equipment 20,000. And investments are 50,000. They are my assets. My liabilities, I have only two liabilities at the top of the question. They are trade creditors 35,700 and wages due are 1,200. So the assets minus the liabilities, I just put my assets here. My assets come to 430,650. My liabilities come to 36,900, which means the assets minus liabilities are 393,750. If they paid 400, that's what the company should be worth. If they paid 400,000, the difference of 6,250 is goodwill. So into goodwill, I'm going to put 6250. The next thing we have to work out are the tangible fixed assets. There are three different types of tangible fixed assets. There are premises, equipment, and delivery vans. So first of all, if we get the cost of premises. So premises at the start of the question are 292,000. Then it says in note 2, they borrowed 120,000 together with 30,000 of their own money to buy an adjoining premises. So in total there, they bought premises worth an extra 150,000. There's no depreciation of premises because in note V it says that delivery vans and equipment are depreciated, but not premises, so there's no depreciation of premises. Equipment. At the start of the question, the cost of equipment was 20,000. During the year then, in note III, they bought equipment for 15,000. So in total, the cost of equipment at the end of the year was 20,000. Plus 15,000. Delivery vans, there was no delivery vans at the start of the year, but they bought delivery vans during the year in note 3 and they were 30,000. So the cost of delivery vans were 30,000. Now we're going to do a note on the depreciation of equipment and delivery vans. So equipment, the equipment had at the start of the year, the 20,000 was depreciated for the full year at 10%. In note 5 it says the depreciation rate is 10%. So that would be just 20,000 multiplied by 10%, which is 2,000. The equipment they bought during the year in note 3, they purchased on the 1st of the 7th, so they would have had that for 6 months. So the 15,000, again, the rate of depreciation is 10%, but we're just going to multiply that by 6 over 12 because you only had it for half a year. So in total equipment is 2,750. Vans. The vans that they bought during the year were purchased on the 1st of the 9th, which means they would have had them for 4 months. So the cost of the vans to purchase were 30,000. In note 5, it says the rate of depreciation on vans is 15%. And again, I'm going to multiply that by 4 over 12 because they only had them for 4 months. So to fill these in, the equipment was 2,750 And again, there's no accumulated depreciation or anything because you only bought the business at the start of the year. And delivery vans depreciation is 1,500. So my total fixed assets, my total tangible fixed assets are 502750. And then I just have to put in my financial assets, which are my investments of 50,000, which leaves me with total fixed assets of 559,000. Next, I'm going to do my current assets. So for my current assets, I'm going to take my closing stock, which I will get from the bottom of the question. It's 20,500, but that includes stock of heating oil of 300. So we're just going to separate those out. So if I take away the 300, I'm going to have 20,200, and the 300 will go in here separately. The debtors less the provision. The debtors at the end of the year, I can see from the bottom of the question, are 34,000 from note 6. It says in note 5 that decided to set up a bad debt provision, which is 3% of debtors. So 3% of 34,000 is 1,020. So I'm going to take that away from my debtors. So I'm going to have 34,000 less the provision of 3% of 1,020 leaves me with 32,980. And the last current asset I'm going to have are rates prepaid. So any expense that's prepaid is an asset. So rates prepaid will be an asset. So we'll have to do a note on rates prepaid. So the rates the rates paid during the year from note 3. It says rates for 12 months of 7,000. So I'm going to put in my 7,000 here. Now, I had rates that were prepaid at the start of the year, and again we spoke about this before when I did the service firm. These little notes here will help us. At the end of the year, we're adding due and taking away prepaid, and it's the opposite at the start. We're taking away due and adding prepaid. So if I go back down to my rates, I had rates prepaid at the start. So if it's prepaid at the start, I'm going to add it on, and from the top of the question, I can see the rates prepaid at the start were 450. Now, there's going to be rates prepaid at the end. It doesn't say that at the end of the question, but if there was 3 months rates prepaid at the start of the year, and then in note 3 it says the paid rates for a further 12 months, means there will be 3 months rates prepaid at the end. How do we work out those 3 months? Well, if they paid 7,000, and that was for a year, I divide it by 12, and if 3 of those months were prepaid, I multiply it by 3. And I'm going to take, that is going to be a minus, because you minus prepaid at the end of the year. Now, the last thing we have to do in the note for rates is take away the drawings, because in note 4 it says that 20% of rates payable for the year are attributed to private use, which is drawings. So, and again, the rates, the word payable is in italics for a reason. It's because payable are these figures here added together. The 7,000 plus the 450 minus the 1,750. That's rates payable. It's not the 7,000 rates paid. So they come to, down here at the bottom I can see that they come to 5,700. So I'm getting 20% of 5,700 and taking it away. So 5,700 by 20%. And again, I'm going to take it away because I'm taking it out of rates and I'm going to put it into drawings later, which leaves me with rates of 4,560. Now for the balance sheet, I'm just interested in this here, the rates prepaid at the end of the year, which is the 1,750. And the 4,560 will go into my P&L later, and the 1,140 will go into my drawings note later. So for the balance sheet, it's just the rates prepaid at the end of the year, 1,750. So 1,750 will go there, which leaves me with the total current assets of 55,230. Next, I have to do my creditors amounts due within 1 year. So the first thing here I'm going to have are creditors, and again I'm just going to get these from the bottom of the question. Creditors are 35,400. So 35,400. I also have a bank overdraft at the end of the year, which I get from the bottom of the question, of 5,400. Now, the loan installment. If we look at the loan installment, it says that they borrowed 120,000. Now, this sum was to be repaid in 20 equal half yearly installments. The first installment becomes due on the 1st of the 2nd, 2009. So the first installment is due on the 1st of the 2nd, 2009. If they're half yearly installments to be paid every 6 months, the next one will be due on the 1st of the 8th, 2009. So 2 of those installments are due next year, and the remainder of it is due after next year. So if they borrowed 120,000 and they're paid back in 20 installments, I divide by 20. And if 2 of those installments are due next year, I just multiply by 2. So 12,000 is due next year, and I might as well fill in down below here, the loan installment due after 1 year will be the remainder of it. So if the total they borrowed is 120,000, and 12,000 of that is due next year, the remainder, the other 108,000, is due after 1 year. It's as easy just to fill that in there now. The next thing I have is interest due. So again, I'm going to do a note for interest due. So if I look at the interest that they paid during the year, I will get from note 3. I can see that the interest paid during the year was 2,000. If I work out what the interest for the year should be for the 5 months, so to do that, I'm going to work out what the interest should be. So if they borrowed 120,000 and the rate is 6%, and they borrowed on the 1st of the 8th, that would be for 5 months. So I might as well put the working in here. So it would be 120,000 by 6% and by 5 over 12, that are for 5 months. So that's what it should be. So that should be 120,000 by 6% by 5 over 12. So the total for the year should be 3,000. They've paid 2,000, means there is €1,000 still due. So that's what I'm going to use from a balance sheet. But again, I might as well finish off the rest of the note because I'm going to need these figures later on, the drawings and the P&L figure for interest. So for the drawings, note 4 again says that 25% of interest payable should be attributed to private use. So the interest payable is the 3,000, not the 2,000, that's paid. So the drawings says that 25% of interest payable. So I'm getting 25% of the 3,000. So it's 3,000 by 25% is 750. And again, I'm going to take that away because it shouldn't be here. It's for private use. So I'm going to take it away from here, and that will go into my drawings note later on when I go to do that note. So in total, again, just for the balance sheet, I'm looking for the interest due amount of 1,000. And the last thing I'm going to have to do is put in my electricity due. And again, that's just coming from the bottom of the question, €460. Which leaves me with liabilities less than 1 year of 54,260. Leaves me, and current assets minus my liabilities, leave me working capital of 970 added to my total fixed assets above will give me total net assets of 559,970. Now, the next part I have to do is the bottom of the balance sheet. So the first thing I'm going to have in the bottom of the balance sheet is my finance by creditors amounts due after 1 year. And we talked about this earlier. It's the remainder of the loan, the 108,000. Then I'm going to have my capital. So the capital is the amount that they paid at the start for the business is the 400,000 from the top of the question. I have to see, is there any capital introduced during the year? Well, they put in note 2, it says they put 30,000 of their own money into the company. And then in note 3, it says they got an EU grant, which would also be capital introduced. So the 30,000 they put in themselves plus the 6,000 grant leaves me with 36,000. I'm going to leave net profit for a minute because that's going to be our balancing figure, or the last figure to go in. I know already that this here, the total of my balance sheet is 559,970. So again, I know that total is 559,970, and that we'll call capital employed. So now if I work out my drawings figure, then I should be able to get my net profit. So I'm going to do a note on drawings. And again, drawings is stuff to take out for own personal use. So in note 1, it says each week Fuller took stock to the value of €80. So if we took each week stock to the value of €80, I'm going to have 80 by 52, leaves me with 4160. It also says that he took cash of 170 a week. So that's going to be 170 by 52, which comes to 8840. In note 3, it says that the total for wages and general expenses includes 3,000 petrol for his private use. So that 3,000 will be drawings. Above in note 7, we worked out, note 7 we will come to in a minute. Note 4 for rates, we worked out that drawings was €750. So that's going to be €750. In note 5, note 4, the interest, we noted that the drawings figure for interest was 750. And the last thing we have to do for drawings is light and heat. I think that should be note 3 and note 4. So light and heat, we need to do a note for light and heat, and that will give us our drawings figure then. So if we look down below at light and heat. Light and heat that was paid during the year, we will get from note 3. Light and heat is 7,500. Add electricity due. We know from above that anything at the end of the year that's due, we're going to add on it. And electricity has to do with light and heat. So there's electricity due at the end of €460. We can see that from note 6. There's stock of oil at the end, which has to be taken away. So we see from note 6 again, stock of oil is 300. So I'm going to take away the 300. And less drawings of light and heat. Now, for drawings of light and heat, note 4 says that 20% of light and heat used. So it's not light and heat paid 750, it's light and heat used, which are these three figures together, which is €910. So it is 20% of 910, which is 182, and again, we're going to be taking that away. So we're taking away 182, which leaves me with light and heat of, this should be 7,500, not 750, which leaves me with, so it's 7,500 plus 460 minus 300 minus, and again, that will change, because that is now 7660. So it is 7660 by 20%. Which leaves me with light and heat of 6128. Okay, now the drawings part of the light and heat, that's what I needed to do know for light and heat, was to get the drawings figure. So the drawings for light and heat is 1532. 1532. So now I know my total drawings figure is 19032. And again, I just want to check that that's right. So rates, and again, for my rates, I've taken the wrong rates figure from up here in rates. Rates is 1140. And then interest is 750, which comes to 19422. Okay, so if I fill that into my balance sheet, drawings is minus, so that's 19442. So sum figure minus the drawings, less drawings of 19442 gives me 559970. Well, then that must be 559970 plus the 19442. 579412 minus the 19442 would give me 559970. And then here we have 436,000 plus some figure gives me 579412. So that figure must be sorry, I'm just going to have to correct this quickly. No, sorry. The difference here, I should have put in this figure because 108,000 plus some figure gives me the 559970. So that figure here must be 559970 minus 108,000, which comes to 451970. Sorry. Some figure minus 19442 gives me 451970. So that has to be 451970 plus 19442, which is 471412. Here we have 436,000. 436,000 plus some figure gives me 471412. So that has to be 471412 minus 400,000 minus 36,000, which gives me 35,412. And sorry, this again is 19,422, not 442. Which would leave me with a net profit of 35,392. Sorry about that. Okay, so my net profit is 35,392. So now to do my P&L, I'm going to start down at the bottom. So, and again, I'm going to link these cells just in case I type anything else in wrong by accident. My net profit is coming from here, 35,392. So now I need to work out my expenses. Okay, so these aren't too bad because we have notes done on most of these already. So my note on rates, I'm going to take from here. I have a note done on rates already, so I just take my final rates figure of 4560. I have a note done on light and heat already, so I go down to light and heat, and I take my final P&L figure from there, 6128. I have a note on interest done already, so I go up here to my note on interest, and I take the P&L figure of 2250. I have a note on wages and general expenses. Now we haven't looked at that note yet, so we'll just have a look at the note on wages and general expenses. So wages and general expenses from the question, from part 3, wages and general expenses are 80,000. Then I have wages due at the end. So we add stuff, wages due. Now the wages due are at the start. So I'll just put in the first of the first, just so we know that they're at the start. The first of the first 18. So stuff that's due at the start you take away. So I'm going to take away the wages due at the start, minus 1200. And the drawings of petrol. Remember we said earlier that in note 3 it says included in wages and salaries was 3,000 for petrol, so that has to come out of here. That 3,000 comes out of here, and we put into drawings earlier. So in total, my wage and salary should be 75,800. Okay, my bad debt provision I've already worked out up above in my balance sheet. Here, my bad debt provision, and there's no increase or decrease, as this is a new provision, so the full amount goes in up here of 1020. And then I have my depreciation of equipment and the depreciation of vans. And again, I have notes done on this, note 2. If I go up to note 2, I'll get my depreciation of equipment to be the 2,000 and the 750, and I'll get my depreciation of the vans of 1,500. So now I have all my expenses, and again they're easily enough done because we have most of the notes done already when we did the balance sheet one. So they come to 94,008. So up above here, some figure less than 94,008 gives me 35,392. That must be 35,392 plus the 94,008. That has to be 129,400. So now my gross profit, add my investment interest, gives me the 129,400. So if I work out my investment interest, now how do I work out my investment interest? It's straightforward. At the top of the question, we can see that, I'll just do a little working for it here. At the top of the question, we can see that investments are 500,000. and the rate of interest in those investments are 5%, and we had them for a full year, so it's just 50,000, sorry, by 5%. So 50,000 at the top of the question, we'll see they're 50,000 and they're 5% investments, which is 2,500. So my gross profit plus 2,500 gives me 129. So that gross profit must be 129 minus 2,500. So the gross profit must be 126,900. Now, in the question, it says that the second paragraph of the question, here, look, the second paragraph here, it says that the gross profit was 20% of sales. Okay, so if gross profit is 20% of sales, then to get my sales, if I get my gross profit divided by 20 multiplied by 100 will give me the sales of 634,500. So if my sales are 634,500 and my gross profit is 126,900, the difference between the two of those must be my cost of sales, because my sales less my cost of sales will leave me with my gross profit. Question, the top of the question, I can get my opening stock. The opening stock at the top of the question is 36,000. From the bottom of the question, I can get my closing stock. So the closing stock is 2,500 less the oil of 300 is 20,200. So sum figure less 20,200 gives me 507,600. So that must be 507,600 plus the 2,200 gives me 527,800. And 36,000 plus some figure gives me 527,800. Well, that must be, my purchases must be 527,800 minus 36 is 491,800. Okay, so that is the balance sheet, the P&L now complete. So that's the balance sheet and the P&L both now complete. So the last thing we have to do is part C, the theory part. It's a summary of advice you would give to Fuller in relation to the information given above. So here we could just simply state that Fuller should keep a detailed cash book and general ledger supported by appropriate subsidiary daybooks. This would enable Fuller to prepare an accurate trading profit and loss account and therefore avoid reliance on estimates. So if to keep a full set of accounts, they won't have incomplete records and they should be able to do up a proper trading profit and loss account and balance sheet. I hope that helps. Thank you for listening.